Hey, everybody, welcome back to another episode of the Growth Capital Podcast. I'm your host, Justin Dixon, and today we've got Laurel Mintz on the podcast. She is the founder and general partner of Fabric VC. They're a venture capital firm, and they focus on investing in diverse founders in the consumer tech, fintech, and health tech spaces. We dive deep into kind of the types of business that she works with, why she chose this niche to focus on, and some statistics on what the actual success rate is of these founders getting capital. We dive deep also into her early career as she was getting her MBA and her law degree before she shifted out and started her own marketing agency. And we talk about how that is a little bit of a secret sauce when talking to and investing in founders that she can bring in her digital marketing agency to help them as they are deploying capital into marketing. So super interesting episode. So let's get Laurel on the pod. Interested in hearing conversations with private equity leaders, CEOs of private equity-backed companies, and startup entrepreneurs where they share their stories about their career journeys, starting, investing in, and scaling successful businesses, and the important role that having the right talent plays in building a successful business, then you are in the right place. Welcome back to another episode of the Growth Capital Podcast. Here's your host, Justin Dixon. All right, Laurel, thank you for being on the podcast. Happy to see you again.
Good to be here. Thanks for having me.
Yeah, well, let's kick things off. Give a little bit of an overview of who you are, where you are, and what you're up to right now, and then we'll dive into some other stuff.
Big question, but I am a former corporate M&A attorney. I have an MBA in digital marketing. I launched an agency called Elevate My Brand 16 years ago. Because of my legal and business background, a lot of private equity and venture firms naturally came to us to market them. So as of late, I recently launched Fabric VC, which is a venture fund investing in diverse founders in consumer tech, future of healthcare, and future of fintech. It's a very exciting endeavor.
Awesome. So I guess let's kind of back up to the beginning. Corporate lawyer. How did you figure that out? I think you went to Rutgers. If memory serves. So are you from the Philly area or New Jersey area, or kind of what's your home base?
No, sir. I am Laurel from Laurel Canyon. Doesn't get much more LAOG than that. My dad was a hippie in the 60s, lived in a commune, sex, drugs, and rock and roll. And I was like, that's fucking crazy. I'm going to go to law school. But I ended up on the East Coast because everyone always said I had a very East Coast energy and vibe. I don't know if you knew this, Justin, but it turns out they had snow out there. And I was like, absolutely not. So I came back to LA as quickly as possible.
Yep. No, I grew up in Pennsylvania, so I know all too well about the snow, which is now why I live in Austin, Texas. So avoiding that as much as I possibly can. So, so at what point did you kind of like say, okay, I'm going to, pursue my law degree and then kind of pivot into starting your own marketing agency? Like, how did that kind of evolution happen? I'm always curious, kind of hear their people's like, origin stories of like, I was in school or I was working for another company. Then I was like, you know what, I'm just going to do my own thing.
Well, for me, it was completely by accident. And when I share this story, one of the big takeaways I hope people always take with them is the universe tells you exactly what you're supposed to be doing, who you're supposed to be with. Like, your path is very clear if you just are open to listening to it. I know that's a little woo, but you're in Austin and I'm in LA, so we can be woo, right? So I have an MBA in digital marketing along with the law degree. And I did that also by accident, at least I thought so at the time. I hated law school. I was like, if I have to spend 80 hours a week doing this work with these people, I might hurt myself. And luckily the dean was smart enough to say, why don't you try the MBA program? It sounds like that's more team building, problem solving, creativity. That's really what your jam is. And she was totally right. But then I did practice. And while I was practicing, my dad got sick. He's healthy now, thank goodness. So if anyone has wood near them, please knock on it. Oh, yeah. My dog just thought that was the door. And he got sick and I ended up having to step down to take over his interest in a company called Bassett Furniture, which is a big national brand. I think you were familiar with it when I asked you last time. Right?
Yeah. Interesting. Okay. That's right.
So I took that over. I was interim CEO there for 3 years, sold that in 2009 and looked around and said, I don't know what I'm going to be doing with my life. Went back and started applying for all the big law firm jobs, got those great 6-figure offers that should have made me really, really happy. And I was like drinking Pepto every day. I was like, this is not my life. I don't want this anymore. And everyone's pain points at that time were around digital marketing or socials, right? When that was evolving. And I woke up one day and I was like, I have a degree in this. I know how to operationally run a company now. I started consulting. And after about a year, I realized, oh, got it. This is actually a career. I can make really good money doing this and set my own schedule and build something that's bigger than me. And that's really how Elevate, my first company, was born.
And so I guess kind of staying on the Elevate path, where is Elevate now, now that it's been 16 years and you also kind of have some other interest tugging at your time in this Fabric VC, which we'll talk a little bit more about here in a second.
Yeah. So as you said, Elevate's been around for 16 years. Can't believe it's a whole person that can drive old. That's wild. And we worked with over 400 companies on that side, including a ton of private equity and venture firms, which is how this came about. But when I decided to launch Fabric, I knew it was going to take a majority of my time. So I did what's called an ESOP, which I know you're very familiar with. And I made sure that my team on the agency side really had ownership over what was going to happen next there, because I knew 90% of my time was going to be focused on building something new. And it was also in furtherance of our social and financial equity mission. My top two folks at the agency happened to be a queer man and a Black woman, and they're just friggin' awesome, and they deserve to build, generational and exponential wealth. So they're really focused on the agency side, and I'm really focused on building the fund. And they're really sister firms and very integrated at this point.
Yeah, I want to talk about that because I remember our conversation from a few months ago and how there's a little bit of overlap, which it seems like a little bit of competitive advantage, I would think. But I guess before we talk about that, let's talk more about Fabric. Why did you launch it? And then maybe talk more about kind of your kind of areas of focus when it comes to founders and types of businesses that you're invested in, because you're not industry agnostic like a lot of private equity VCs that I talk to.
That's correct. Yeah, we're really focused on consumer tech, future of healthcare, future of fintech. I'll share a bit more about the marketing special sauce a little bit later. But again, it started kind of by accident. I was working in private equity and venture on the marketing side, and one of the GPs asked me to stay on a call after one of our marketing meetings and said, Laurel, you need to go launch your own venture fund. You have this insane early deal flow, this marketing special sauce, this commitment to diversity, like go launch a fund. And I was like, very flattered. No, thank you. That's nuts. I'm not doing that. I'm an operator. And then I started digging in, and frankly, I saw a business opportunity because of lack of capital that's deployed into those particular founders. I don't know if you know the statistic, but when diverse founders do receive funding, we return on average at a 25% higher return rate. So like, let's be clear. I am a bleeding heart for sure, but I'm a fucking capitalist. And like, I saw an opportunity in the market that I could service. And so my first call was actually to a woman named Jessie Draper. I don't know if you're familiar with the Draper family. They're like fifth generation
unless it's
venture.
like related to Don Draper from Mad Men, then no, I don't.
No, everyone says that. No, they're like her great grandfather was like one of the first venture capitalists.
Oh wow!
And so Jessie and I have been friends for 20 years. We came in to help her vet her fund one consumer deals because that's what we knew very deeply on the agency side. We then became LPs in her fund too. And so I called her as my first call when I was like, dreaming this up. And I said, Jessie, I think I'm going to launch a venture fund. What do you think? And her actual response, Justin, was, fuck yeah, I'm in. Here's a check. Go raise a fund. I'm sitting on your board. Go do this. And I was like, that's awesome. I guess I just launched a venture fund. I just got my seed funding. So it was pretty wild.
So how does it work to launch a fund? I talked to a VC the other day, and he went through VC labs. They help you kind of launch your fund and all of that. It sounds like you were more of a kind of voluntold to start a fund and were handed a check and kind of had to do it yourself. So what is it like to start a fund kind of from scratch? And then, how do you kind of start the deal flow process?
I called a bunch of people and I said, I know this is wild, but I'm going to do this thing. Will you join me? And literally every single person that's on my 12-person venture and advisory board now said yes. And because I've been in the world just in a different capacity as an operator at the top of my game for a long time, I've just been able to surround myself with incredibly smart people just like you who really saw the vision that I had. And they were like, it was like everyone had a light bulb that went off over their heads when I was telling them this. They're like, oh my God, yeah, you're exactly the right person to do this. And so in that group of folks, certainly were people like Jesse who had already launched really major funds and who were able to kind of coach me along the way. And I work with a woman named Jahara Tariq, who's my principal. She's a super smart woman, came from M13, Atlas Peaks and Moonshot, so very traditional venture background. And then I'm working with Stephanie Bond, who came from private equity, and she had that really deep diligent side of her track record as well. So it was like the light bulb moment, surrounding myself with really smart people, and then more importantly, understanding I know how to run a business and operationally launch something really well. And the smartest piece of any CEO in doing that is surrounding yourself with people that supplement or complement the pieces that you're not strong in. And that's exactly what I did.
Yeah, I noticed one of your kind of core kind of pillars, if you will, on your website was kind of human capital, and I'm kind of wondering, as a person that owns a recruitment business, how involved do you get in the portfolio companies post investment? And maybe this is a good time to also dovetail into your marketing kind of plug in. But it's kind of curious, like, starting businesses, people are like, oh, I need a lot of money, but it's like, yeah, you need money, but then you need talented people, like you said, to surround yourself with to take that from 0 to 1, 1 to 10, whatever the stage you are at.
We don't. So I've been asked to sit on almost every board, and I'm like, I don't have capacity for that right now. I'm very flattered, but we have a whole second layer of diligence that we do that's marketing focused. So before we will invest in a company, we plug into the back end of all of their omni-channel marketing systems. So web, social, e-com, anything you can think of. And then they'll tell us who their top 3 to 5 direct and aspirational competitors are. So by doing that analysis, we can see, are their numbers real or are they full of shit, which a lot of these founders are, sadly. We can also see how far they are from their direct and aspirational competitors in their space, which means that we can see if our check's going to meaningfully close the gap for them. And if they have a really strong product market fit, or they're starting to really pick up traction, but they really haven't fit their go to market yet, that's when we can come in and support with some more marketing expertise. And we do it very cleanly and very intentionally. So on about a quarter of the deals that we write cash checks to, we will match with sweat equity on the agency side. It's a little bit more sophisticated than the venture studio model, I would say. I think that that's a little bit sharky, because you've had these companies that have just raised all this money, and then you're basically like, spend most of it on us to bring you to market or to launch you into these different channels. To me, that defeats the entire purpose of being a true partner. And we have really high conviction with the companies we've done that with. And I'm very pleased to say that 30% of our portfolio has already raised or is in process of raising their next series. So the thesis is working.
So when you write a cash check, you said about half the time or a quarter of the time, you will also kind of bring in, is it kind of like, hey, in order for us to invest, you need to, leverage our marketing, or is it more of an ask, not a tell kind of scenario?
It's more of a targeting. Like, we can see based on the analysis that we've done where they're strong and where they're not strong. And if they have a really strong, like, a lot of founders are great at building product and building team, but not great at marketing. It's like 80% of the fail rate, honestly, is due to marketing statistically. So it's really more of a, hey, we see this as a weak spot. Are you interested in a bigger partnership? Because if so, we'll bring our team, our agency team in and wrap a fractionalized marketing agency around you and really help you launch this thing into the stratosphere. So really get them to that hockey stick growth. So it's not a tell, it's a, we'd love to do this if it's a fit for you, because again, we believe that we're true partners in this, and you're not going to, tell someone who's a partner what to do. You're going to ask them if it's the right fit.
Yeah, and essentially you're presenting them an opportunity. They're going to probably spend the money on marketing anyway, or at least a component of it, right? So, why not keep it with somebody that's financially invested in the success of the business, with some cash, that you've already invested.
Yeah, they're pretty thrilled about it usually. And I will say it's also gotten us into a couple deals that we would never have had access to or allocation in, because a lot of these founders know that 80% of use of 50 to 80% of use of funds is usually spent on marketing. So if we can solve for that, it keeps them alive longer, the burn rate's lower. It's just a really net positive for everyone.
Yeah, that's where I was going to go with my next question around kind of your competitive advantage. Obviously, you're kind of competing or niching yourself down to the industries that you're going after, but also the types of founders. So maybe talk more about the founder I guess, filter that you go through, and then how does that, with coupled with your marketing expertise, kind of provide you with some competitive advantage to the other VC firms out there that either are targeting these demographics of folks, or they're just also talking to other, more general VCs?
There's not a lot of us out there that are targeting these founders, at least at the early stage. I think Series A and beyond, a little bit more targeting in that, a little bit more money in those categories. But like I said before, like we believe that this is a model that is just a missed opportunity. And the
Mm,
statistics really do show, again, when you invest $1 into a diverse founder, we make it stretch to 5 because we've never had any indication that we would ever get funding. So we're scrappy AF, and that's why we
yeah.
can make $1 stretch to 5. So that first layer of targeting is super intentional. It also happens to be who we saw and who we see on a daily basis on the agency side. Of the over 400 companies we've worked with, over 200 were diverse led, and almost 40% of those companies raised capital. So we really
Mm,
understood this startup raise exit model that was already part of our kind of ethos as a firm on the agency side. This is just the next natural step on it for the founders. And then the marketing piece is like everything to them. Honestly, I mean, we, because of the industries we focus on, consumer tech, future of healthcare, future of fintech, most of those are going direct to consumer or B2B to C. And so marketing is, it's this giant black box for most founders. And if we can demystify it, and not just demystify it, but really bring qualified team to the table from an omni-channel perspective and make sure that they're launching this the right way the first time, we're going to keep them alive for a lot longer, hopefully get them to their next series or 2 or 3, to an IPO or some sort of liquidity event. That's really the goal.
And what stage of a company are you getting into? Like some VCs are very early stage. They have an idea. They're almost kind of like an incubator, accelerator kind of flavor. Others are bordering on, private equity, stages. So where do you kind of fill funnel? Is it napkin idea, or I have revenue being generated?
We're seed and pre-seed. I will say, I think because I've been in market for a long time and because of the current landscape, we have seen a lot more later stage deals. So like seed up to series A. So around 50 million in valuation. Everyone values the different series differently. So series A could be more, could be a little less than that. I will say most of our checks have been in seed. We've done one check in pre-seed. I think that that is more an indicator of the current market state because what we call tourist founders are scared to come to market with just an idea because there's so little capital being deployed right now. Everyone's a little nervous in what's happening economically, which I know we talked about before we started this. And I think because of that, both founders and funders who are more tourists really aren't playing in the pool yet.
Yeah, and you launched this fund what in 2021, correct?
2024 was when we started deploying capital. We started
Okay,
raising about 6 months before that. We're a rolling raise, rolling deploy fund. So we don't call capital until we know exactly what we're deploying that into so that our IRR is really strong. And,
mm,
money, capital in the bank doesn't make you money as an investor, right? So it didn't
right.
make sense to us. Plus, fund ones tend to be the banger fund because we have so much more to prove as a first time GP. I will also say they say that there are certain venture vintages because venture is such a bougie industry. Of course, it's vintage, like a fine wine.
Right.
And this is supposed to be one to end, to end all venture vintages because of all of the different economics just aligned right now.
Yeah, well, I want to talk more about that because we talked about it a little bit off air, and I didn't want to waste all the good questions without the recording going. So I guess we've had a lot of change over the last few years. We had COVID, and then we had 2021, where everybody could raise money for any kind of deal, and then that changed very quickly in 22 and 23, and deals kind of dried up. Mainly, I'm talking about the private equity world. I don't dip into the venture too much, but I'm kind of curious what you've seen kind of pretty much over the last maybe year or so. We're recording this in early April 25. So, we've had, an election, we had a new president start, we have now tariffs, and, inflation's still kind of uncertain. And so what have you kind of seen from kind of the deal flow, maybe kind of that kind of lever or that metric will be helpful to understand. And then, the types of opportunities or businesses that are starting to come out of this.
Oh, that's a very loaded question. I will say it's been a very challenging time to fundraise. However, it's a great time to be deploying capital. So because there's been a lack of liquidity events, there's less money in the market right now. There's still a lot of money out there, a lot of dry powder, as we call it. But people aren't deploying quickly. They just aren't deploying like they were, to your point, in 2021. Which means that if you do have capital to deploy, you're in a really power play position. So I will tell you that we have negotiated discounts on almost every deal that we've closed in the last year and a half, 18 months or so. And that means that, again, your returns as an investor are going to be higher, right? Because we're getting more equity for less capital outset. So that's the positive side of it, I would say. It is a challenging time to raise, of course, but that doesn't scare me. I started my agency in 2009. Someone called me a business cutter the other day. I was like, that's a little dark, but
Right.
but the end result of that is like, if I can raise this fund in this environment, when we go out to raise a 75 or $100 million fund next year, the hope is that we'll be so much more aligned with our investors on the more institutional side, and we'll have a much better and stronger track record. So there's
Yeah.
positives and negatives. It's not fun, I'll tell you that much. The raising part is fun because I get to educate people, but it's a longer runway, I would say, in terms of timeline to get it closed for sure.
Yeah, and I was curious about kind of just the kind of types of businesses or types of founders that you're seeing. Or is the deal flow still, very high at high levels, and also the quality of the deals that are coming through? Because obviously you can have a ton of deal flow, but if the quality isn't there, or maybe there's a big delta between their valuation and the valuation that you would put on it, I'm just kind of curious, kind of what you're seeing as far as like quality and just overall deal flow.
Well, the good news is about Fabric is that we really try and be last checks in or close to
Mm.
that, which means we're not the ones setting the price, or the valuation rather. We're really coming in as kind of the heroes to close the rounds up, which is a really smart place to play, and especially as a fund one, because you think about it, like you've had all these bigger funds that have already come in, done their diligence, basically rubber stamp the deals, and we've been very lucky in being able to do that because we have really strong relationships with other lateral and upmarket venture funds that either couldn't do the deal and sent them down to us, or brought us in on a deal and said, hey, we just want to close this up. Do you have an extra couple $100,000 to throw at this deal? It's a really smart deal. To me, that's really about building your ecosystem. And that's exactly how I built my first company, was building a massive network of people that knew exactly who we were and what we stood for. And I think we've done the same exact thing at Fabric.
So you're able to kind of talk to other VCs that are out there that maybe invest a little later stage or in maybe bigger, smaller companies, whatever but if they know exactly what your ideal customer or ideal kind of company profile is, they will think about you and say, hey, either, hey, help us close this round because we think it's a great deal. To your point, we need a couple $100,000, or it's like, hey, they're not ready for us yet, but we think you could help them get to that level. And then maybe we kind of help them on the next round. Is that kind of how
Exactly.
you think about it?
Exactly. Like we had a deal, a really interesting legal tech deal, pre-seed deal, actually one of our only pre-seed deals. And I have a girlfriend that runs a fund that's a little bit bigger than mine, so she could write slightly bigger checks. And I said, I think this deal is right up your alley. You should take a look at it. And she closed the entire round out. So it works both ways, right? Like we had a deal that came to us really early, and I was like, I want to do this, but I don't want to do it unless I know it's going to go and they're going to close the round and be able to, continue forward. And she was like, oh, I'll take this deal all day. So it's about, again, it's about that ecosystem. It's creating our own kind of little club of deals that we kick back and forth when they're good ones.
Yeah, you're kind of, scratch my back, I scratch yours, right? Because if you're getting deal flow from maybe an upmarket VC, they're probably your first call once that company that you invest in is ready for the next echelon. And then you say, hey, we've helped them get to this level. Maybe you brought your marketing team in or whatever, and then they are able to actually come in and they know, like, and trust you already, right? The VC, and so they're like, cool, this is a Fabric VC backed company. It already checks that kind of no box a little bit.
That's exactly right.
Overall market, obviously, because you are talking to a lot of founders, you're talking to a lot of people with money to invest in your fund, and obviously you're talking to other VCs out there and probably some private equity groups. What is the sentiment that you're seeing now that we are stepping our toes into Q2? Q1 maybe wasn't as booming as people may have anticipated from taking the shackles off and just going back to a 2021 kind of deal flow perspective. But what are you kind of seeing, and maybe what is maybe a little bit of a crystal ball future projection for the rest of 25, just to kind of understand a little bit about what you're seeing about the market?
Yeah, I think it's still really slow. I mean, the IPO markets haven't opened up the way they thought they were going to. We're hearing some people predict that that's not going to happen until 2027, which means all the downstream flow is going to be really challenging because that's what leads the markets. And then that alongside with the public markets, kind of crashing and burning as of late, there's a lack of liquidity in the market, which makes it very challenging from a cash flow perspective for a lot of these investors. Like, they expected to have distributions on some of their deals. I mean, we are invested in several funds. We thought one of them was going to close this year. Turns out that's definitely not going to happen. So I think that there's still a constriction in the markets, in every market that's happening right now. There's just so much uncertainty, and with uncertainty comes a lack of action. And unfortunately, that is very challenging, especially for these founders, that they just need that next few million to stay alive for the next 18 months. So unfortunately, I think it's going to kill a lot of companies. But I also think that the ones that we invest in, again, they're really they're smart with their capital, and they have been smart because they've known, or they've never had indication that they would get the type of funding that they were hoping for. So they're able to be less capital intensive and keep runway longer with less monthly burn or annual burn. So I think it's still going to be a very challenging market for the foreseeable future. Yeah, tariffs are killing a lot of the consumer brands. Like, luckily, we invest in consumer tech, so there's an enablement piece that's not as affected with that. But people are really scared right now, all across the board. It's not a great time, to be honest.
Yeah. I was talking to a couple of private equity groups that I know, and the sentiment is that some of the private equity groups that raised funds, call their first fund, call it 2019, 18, that, they invest in a few deals and now they're at that 3 to 5 year or 5 to 6 year kind of hold period. Investors are like, yo, dude, you need to start exiting some of these companies. I want my capital back, whether there's, friends along with it in returns, or I just want my capital back to go do something else with it. They were kind of talking a little bit about that some kind of first funds that that raised a while ago that haven't been able to kind of exit properly and hit their kind of benchmarks from a return perspective, may no longer exist, because you can't raise another fund if you don't at minimum achieve, your benchmarks. It's really hard to kind of go out and raise more money and be like, hey, we screwed the first fund up, but
Yeah, give us
trust us
more
on the
money.
second one, right?
Yeah,
Yeah.
I think that we're seeing a lot of zombie funds, to your point there. We're also seeing a lot of people taking haircuts on secondaries, right? Like, because they have to provide liquidity to their LPs, they're just gonna sell off where they can sell off, and they're gonna take a big haircut on that. I would never do that. And that's also part of understanding, like, that venture in particular is long and patient capital. So you really want to play your money out to that 10, sometimes 11 or 12-year term, depending on when you invested, because you don't want to take a haircut. We were in that conversation on that late stage tech fund that I'd mentioned, and I'm just holding. And some people in the SPV that we were in for this big tech fund, because we got this specific carve out, they're like, we love some liquidity. We needed some liquidity. And the haircut was like 40%. I was like, fuck that. I'm not doing that, for an extra year of just hold your breath, hold steady,
Yeah. No, I'm invested in some real estate deals that people are, kind of in that same position. Like, hey, if you can give me half my money back, I'll take it and run, because I need it to do something else with, right? Or different periods of people's lives they need capital more than in other periods, right? So
That's true, but I
you're
think
kind of
it's
what.
pretty short-sighted, and you should never invest with things that you can't let ride, right?
Well, that's going to be my point. Is like if you're putting your nest egg or oh shit fund into a venture capital fund, that's probably not the smartest place to invest that.
No,
At least in my opinion. And I'm no
part of the
financial advisor. I'm
education
not
piece.
providing advice.
Yeah, it's part of the education. I tell people, like, because, I'm obviously out here fundraising, and I always ask people, like, do you have your Roth, your public markets, your real estate play, and your 401k? Do you have your financial foundation built? If your
Yeah,
answer is no to any of those questions, you're not ready for venture yet. And that's
yeah.
okay. But you've got to build a strong and smart foundation with, less fluctuated, less high risk capital, or less high risk investments before you're ready for something like venture.
Totally agree. I want to kind of switch a little bit and talk a little more about the founders a little bit that you're talking to, because I do some angel investing here in Austin, and we go to pitches and we see tons of kind of founders come through, and we're an industry agnostic fund or group, so we see health tech, we see med device, we see SaaS, we see everything in between. I'm curious to kind of get your thoughts on kind of red flags for founders. So if there's any founders that are going to be listening to this episode, things that they should button up or change or not do during a pitch that is a very clear indicator that they're not going to get your capital.
I think ridiculous projections, especially if you're a pre-seed, like pre-revenue company, like we're going to hit 100 million in 2 years. No, you're not. Like, you're absolutely not. I think there's definitely a space in place for a little bit of an ego as a founder, for sure, but you need to be realistic. And if you have those projections, you better back those up. Like, you better have some crazy exhibit somewhere that shows me how you're going to get there, because I will straight up not believe you, especially when you have this like crazy hockey stick graph. I would say also the conversation around AI is really a salty one for most venture funds right now. I think most people think that they need to pitch AI. And while I think it is an important layer for most businesses and is a great starting point on a lot of things, most people are just pitching it for the sake of pitching it, and they actually have no value set within the context of the company that they're growing. Or they don't actually have any AI built. They just have a little talking monkey in the corner putting data into a spreadsheet. That is not AI. Or if the final piece is like, I just think you're going to be wasting my money and your time building something that you could layer onto an existing GPT and just skin it. So there's like a lot of red flags for me around AI, even though founders right now think they've got to talk about AI.
Yeah, I wanted to ask a little bit about that because I feel like everybody either has AI in their name now or .ai is the website. And to your point, they're talking about AI as if it's the leading feature of their product, and it's really just a chatbot or it's a plugin to ChatGPT that helps you write a better email. And so I'm curious kind of how you, I guess, suss out in a pitch, or maybe it gets to due diligence at this point, or at least kind of second layer kind of conversation around what AI, what actually kind of AI are they using? Because if it is just a chatbot, then it's probably not really worth it, or maybe it's really something cool, but they're just not explaining it, I guess, correctly. Like, how do you suss that out?
Yeah, well, we do a lot of deep diligence, and my operating partner who focuses on that, we also use a third party software that digs into like 340 data points. But I would say you don't even really need to usually go that far. Usually you can ask a couple of pretty pointed questions and they'll crumble, right? Or they'll come back to you with a really smart answer and you'll be like, okay, let's go into actual diligence on this and dig in on the software that you're building and see if this is really what you think it's going to be. I also happen to be married to an engineer, and he is very skeptical and very smart. So I like to lean on him if I've got questions on that kind of stuff too. Ultimately, I don't think anybody is a real expert on it yet. And so I still think it's a little wild, wild west. So you got to really impress me. Well, I will tell you, like, for example, one of the companies we invested in is a legal tech company. They're using AI to build meta ads at scale, targeting wage and hour workers. They're on the good side, that they're not getting paid a fair wage, and they're there to support them and help them litigate against that. And they were using it in a really smart way, but they weren't building it from the ground up, right? They were layering onto an existing GPT, which meant they could move really, really fast on on this whole thing. So like that was a thing where I was like, wow, that's a fantastic use of AI, right?
Yeah, and it's also leveraging existing AI platforms. It's not like you have to go out and build your own, language model. Like you can literally leverage something else, but it has to be, the wrapper still has to be really good, and and the actual who you're going after has to be, a strong, addressable market. So,
Yeah, and he happened to be a technical founder. He was a two-time exited founder in this specific category, so he really knew his shit. And so any question you had for him, he had the right answer to. And then, of course, when we dug in on the actual diligence of the software, it was super legitimate.
How often, that kind of brings up a question here around founders. Like, how often are you open to or 100% opposed to investing in first-time founders?
I don't know if I've ever answered that question, actually. I think that there's an opportunity for everyone. Yeah, I don't think it says one thing or the other. I like to see some fail points. I will say, I think a little bit of grit, a little bit of skin knee, I'm good with that because I know that I've done that. Like I've been doing this a long time. But there's also something that's super fresh and exciting about a founder who is like, I just had this great idea. I'm executing against it. I really think this is going to be the next X, Y, and Z. Like there's a balancing act there, I think. And the founders that are young and hungry and really exciting, I find that those are the ones that we can help balance operationally on the team side with marketing and really round them out more effectively. Yeah, I would say it depends on the idea still. I don't think
Yeah.
it founder version of the founder
Yeah,
necessarily.
no, I like that because I think some people think it's like, oh, they're only going to invest in like multiple time founders, or I kind of also like people that have had, like, to your point, skin knees. They've maybe started a company and failed, and maybe, as long as they've learned something from that, it's like, hey, how did you take that learning and actually improve upon, or try to make sure you don't go down that same path, or stumble over that same hurdle.
Yeah.
Because I actually invested in a founder that they had at least one other startup that they started that had failed. And I literally asked them, like, what happened and what are you doing now to kind of make sure you mitigate against that happening again? And, there's a great answer. And, obviously we made the investment. So it's kind of interesting to get different people's opinions on first time founder, multiple founders, failed founders, like what that looks like. Some people have very strict opinions, and others it's more kind of case by case as far as that
Yeah, for
goes.
me, I think it's case by case. I like to see a founder who can pivot. Like we invested in a company that pivoted so brilliantly from a pet food company, which is a category I really wanted to be in, but they figured out that the protein in pet foods is going to continue to be really challenging. And so they found that there's this like whitefish in a couple of bodies of waters in the South that the state will pay them to cull out that they can then grind into a protein to put into pet food. So they've pivoted into an ingredients company and they're now selling that ingredient to like the Purinas of the world. And we think that they're going to be set up for an acquisition by Purina in the next 2 years because they saw an opportunity and just pivoted to meet it. It was amazing.
Yeah, I was kind of going to ask about company pivots because I think one of the investments that our group, some people in our group did, I talked to one of the investors and like, yeah, this guy's tried to pivot the company like 3 or 4 times in like less than a year, and it's like, how do you balance that? Because you're you're an LP, you're not kind of something you're probably on the board maybe on some of these, but you kind of don't have a lot of control because you're not a majority owner in these deals typically, right? So how do you kind of try to steer or kind of put some guide rails around a founder that is just continuously, maybe have too many ideas and they don't know, you need to kind of narrow them down kind of post, once you've actually invested.
Yeah, I haven't had that issue yet, but I would say that's usually like a board of advisors request, right? So, like, who's the board of advisors? How are you leaning on them to help you make smarter decisions? Because if someone's pivoting 3, 4, 5 times, they're kind of like a chicken with their head cut off because they're not focused.
Mm-hmm.
I can usually spot those types of founders early. So like I said, I haven't had that issue, but to me, that's not having the right team around you that's helping to guide you in the right direction. I've certainly been asked to be a guiding light on a lot of things because for whatever reason, people think that I have a lot of the answers. I've been through a lot, right? But yeah, I would not invest in someone probably who's already done like 4 or 5 pivots on one company.
Yeah.
I hate the
This
word
has
pivot
been
in
very, what's
general.
that?
I said I hate the word pivot in general.
Yeah. It's a change course or to completely rip
Well,
up and
it's just
replace.
like a bullshit tech term that like everyone thought was the cool thing for like a hot second. It's like what AI was. It's like what AI is now. Pivot was like the term. I don't know.
Yeah.
Like metaverse.
Um, as we think about kind of I know we already talked about kind of broadly what we think, 2025 is maybe going to look like, but, from a specifically from a Fabric, VC perspective, if we jumped on a podcast a year from now, what would you be excited about to talk about a year from now, if from a Fabric perspective?
Yeah, well, we'd be raising our next fund, so that's super exciting. Much bigger fund, and we will have had 25, hopefully 2025 investments done at that time on the fund one. Hopefully some really great markups, which we're already seeing on the current fund. I also, and this is going to sound really weird, but I hope to see a couple failures, because unless you've failed on a couple of these companies, I just think that that's the standard, right? Like if you have 10 companies, 8 are going to fail, one will be your 3 or 4x, and one will be your Google. That's the typical standard. I believe we're solving to provide alpha with the marketing side, but I still think that the failures are badges of honor, and that means that you get to focus your effort and your follow-on capital to the companies that are really the winners. So I
Mm.
know that's a really strange question, but I think it's a really focused operational question, or answer, I should say.
Yeah, it's kind of like you're almost like, okay, almost like cull the herd, right? Like let's
Exactly.
trim some fat. We know that none of these or not all of these are going to be massively successful unless we're geniuses and we've hit the lottery on all of them.
I mean, you have a dream, right? You have a
That's
dream.
right. I mean, if that's the case, then you've got a lot to live up to in fun too, right? That's
Yeah,
also like,
exactly.
gosh, you almost like don't want to overperform too much, because then fun too. If you're not even overperforming that, it's like, oh, it's hard to replicate. But no, I think that's kind of interesting, as far as kind of the calling the herd and being able to take that follow-on capital and put it into the ones that you think or know are going to be the ones that are going to actually benefit from some extra capital.
That's exactly right.
So so this has been a lot of fun. This has been kind of our third or fourth conversation, I think. So I love kind of talking to people that I've met in the past and getting to get, second, third layer deeper on some things. So this has been very cool. I want to kind of pivot kind of to the final kind of three questions that I ask every guest, as we kind of wrap up here. But first question is, maybe give us an influential business book or just a general book that you've found kind of helpful in your journey.
Yeah, I really like the book by, I have it pulled up because I'm terrible with names,
Mhm.
Brianna Wiest. She wrote a book called The Pivot Year, 365 Days to Become the Person That You Want to Be. And I read that when I was starting to think about this journey. And I just think that she's a great writer. She speaks from the heart. It's very approachable. And I think that sometimes, and of course, I said, I hate the word pivot,
I
but
was just gonna say that.
but I love this book because I think that we're always evolving in our lives, and sometimes you need a little guidance, a little woo. I actually was having a rough day the other day, and I asked ChatGPT to like pump me up a little. That was
Mm.
really interesting. They gave me like a pep talk, it was really cool, and that's kind of what the book is about. Is like, how do you focus on the things that light you up, and how can you create a life that you truly love? And I think that's really valuable.
Yeah, no, that's interesting. I've not heard about that book, but I'll have to check it out. Very cool. Second question here. What is your favorite thing to do outside of work?
Oh gosh, so many things. I love to work out. I work out like 4 or 5 days a week. I did Pilates this morning.
Mm.
I box. I do hot yoga and hot spin, which is batshit crazy. It's as
Oh,
batshit
wow.
crazy as it sounds. I know. I saw you had a bike behind you, so I know you like to
Yeah.
spin, but it's wild. And I love to cook. I love, love,
Okay.
love. And that's really the only reason I work out, is so I can eat all the things.
Yeah. No, that's a good reason. My wife used to teach spin, and I've taken a couple of her classes back in the day, and yeah, I don't think I could do hot spin. I think I would die.
It's
Um,
mostly athletes, but for me, because my brain goes so fast all the time, if I'm not working out to the point of like I might die, my brain's still thinking, and I don't have peace. So I need a really hardcore workout.
Fair enough. Fair enough. All right. Last question here. Favorite vacation spot?
This one's really exciting because we just bought a piece of land in our
Mm.
favorite vacation spot. So we travel to Cabo a couple times a year, and we just bought a piece of land in Todos Santos, which is about an hour north of Cabo. It's this like super peaceful, super chill area, and we're about to build our dream house from dirt, which is wild.
That is awesome. Are you planning, is this going to be your dream vacation house or your dream retirement? We're going to live there 90% of the year.
My parents are still alive, which I'm super excited about. And my sister just told me that she's pregnant. So I'm going to want to be here a little bit more, I think. The thought around it, Justin, was we have this cute little house in Toluca Lake where we live, and we were starting to look at the next big house in LA. And housing prices here are wild. Interest rates are wild. And my husband, being the smart engineer that he is, said, why are we doing this? Like, we always said we wanted to retire in Mexico. Why do we have to wait until retirement age to do that? And so that's what we're doing. So we'll be there part-time, here part-time until we retire fully. And then I think we'll be there full-time. That's the goal anyways. We'll see.
It sounds like a pretty awesome, journey that you're going to be on, and would love to hear some updates on that as we can connect down the road. But this has been awesome to kind of talk more, Laurel. What if people want to kind of learn more about you, learn about your fund? If maybe there's a founder listening to this and they're like, I just want to pick your brain about something. Like, what's the best way to connect with you?
Yeah, I don't let people pick my brain anymore. It's too valuable. But they can sign up at fabricvc.com. We have a pitch day that we do quarterly. And if you sign up for the pitch day, you automatically get dropped into our deal room to be reviewed for the next capital deployment period. So it's we've operationalized our process really efficiently because we're a small team. And I would say that pitch day is also open to anyone. So our next one is in May, and it's a great way to understand how we think about our founders. That room usually has 80 to 100 people in it, of founders and funders, and it's just a good time. And then, of course, all our socials, which are also on the website. We do a ton of content and education around the category.
Awesome. Very cool. We'll add all that stuff in the show notes. Laurel, it's been awesome. Thank you very much for spending some time with me and the audience today. It was a pleasure.
Justin, you're the best. I really appreciate you having me.
I hope you found at least one actionable insight from this episode of the Growth Capital Podcast, your one-stop shop for insights from private equity leaders, CEOs, and startup entrepreneurs on starting, investing in, and scaling successful businesses, as well as the role having the right talent plays in growing a successful business. It would be greatly appreciated if you would rate and review this podcast. And if you're watching on YouTube, please like and subscribe and drop us a comment so we can expand the audience of this podcast. Thank you for all your support, and don't forget about upcoming episodes dropping every Tuesday.